Hey everybody, hey Patrick, hey David, how's it going everybody? Thought I'd start the stream just a minute early and start chatting with you. See how everybody's doing here. We'll get started in about 1 minute. So we've got on tap today, huge opex that happened last Friday, 3-day weekend, whew, and indications are that we are still possibly going to see a big pullback. And then, as always, 30 minutes of your request. So if you want to chat, you want to make the request, you got to be a subscriber. You got to hit the subscribe button while I'm live. You can request tickers. And if you catch this later, I'm not live anymore, then go ahead and leave a comment. I'll do my best to throw you a chart. Or you can just click in the description, come join Discord. And, of course, I'm willing to give you a chart anytime. But you got to tell me, when you get into Discord, you got to tell me what you're thinking. It's a little more interactive than right here on the live stream. So, all right. Looks like a quiet crowd, but it is now 5 o'clock. So, welcome everybody. Welcome. And let's jump into it, shall we? All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here, intended to be informational, educational, and fun. Hope you have fun. It's not a recommendation to buy or sell anything. I mean, anything at all. Anything from me, anything from anybody else. I don't recommend you buy anything, financial instrument or otherwise. If you desire personal financial advice, you need to hire and consult a financial advisor that has a fiduciary duty to give you advice based on your financial situation. So, hey Deb, hey Carla, hey Tara, hey Michael. We'll get to that in just a minute. Well, sorry about that. I didn't send out an email. So, alrighty, moving on. So next up, I appreciate that, Carla. The heads up. I'll see what happened there. Somebody misfired something or other. Anyway, so there we go. And now let's jump into what I'm talking about here. So we've got this right here. A huge options expiration last Friday. Massive gamma expired. And what does that leave us? Well, it leaves us right now with a rather clean slate, and we could see that loosening up today. We got a little bit of pullback. We got a little movement, and we're quit getting squeezed higher. That's the big thing going on here. And what does that mean? Well, it means we don't have that the options supporting us anymore, so we can do the pullback that I've been warning about for about 3 weeks now. It feels like we came up into that zone, the danger zone, and now we're due a pullback. That pullback can be about 5%, could be upwards of 10 to 15%, depending on what you're looking at. But 5%, it'd be pretty reasonable. I mean, the last time we saw Nasdaq at this RSI type level, RSI definitely showing overbought. Last time we saw Nasdaq in those levels, we saw 5+% the last 2 times we've been up here. So just watch out. Right there we saw a pullback. Right there we saw a pullback. Back here we saw a large pullback, and back here we didn't immediately see a pullback. We did see a pullback eventually, and then over here we did see a pullback. So when Nasdaq gets into these RSI levels, we tend to see pullbacks. All right. The one exception being right there, we didn't really get a pullback. We got a little sideways chop and then an explosion higher, pushing us even further up on the RSI. Now, RSI can stay overbought for a long time. Like it can stay, back here we saw extended periods where we stayed over 70 on RSI. It can maintain that level. It can stay irrational, but it's not highly likely. It is likely we see RSI drop back at least toward the 50, if not all the way near the bottom. Also, here we go. Cumulative global sector fund flows. What we've been seeing lately. Bunch of FANG stock, big tech, AI, heavy stuff popping right off the top, while energy continues to languish down here. Hey, Kimberly, good to see you. So, current situation, 34,000, halfway. Oh, glad to have you from the skies. So, If you drop off, no big deal. I'll try to get your Tesla here before we wrap up. So that's the situation. We got most of the sectors in the middle. We've got technology banging out the top, and we got energy banging out the bottom. We've got materials kind of languishing, and financials, of course, been kind of rough. Real estate looking like it's going to have some trouble. And, I've talked about commercial real estate and the fact that we have a lot of loans due in the next 18 months or so. The rest of this year, 2023, into 2024, there's something like 2/3 of the loans on the books, the commercial real estate loans, are going to have to be refinanced or they're due. And to refinance that kind of money, the rates are incredibly high compared to what they were at zero interest rate policy. Zero interest rate, ZIRP, is a thing of the past at this point. I don't think we're going back there anytime soon. So the reality is they're either going to have to bite the bullet and refinance, or there's going to be some bankruptcy coming out on commercial real estate. I need to adjust this mic real quick. There we go. So be cautious if you're chasing down some of these bottom ones. There's still risk in financials. There's still risk in real estate. While there might be opportunity in energy to start performing again, and there might be risk in technology to pull back. So that's kind of the landscape there. All right, moving on. Remember, here's the outlook. Huge opex. We talked about that. We're still talking about that we may see a pullback, and then I'll take 30 minutes of your request. So let's jump into the red list. S&P 500 did come up into these extended zones. Now turning down at 44.24. I kind of thought we might see that, and totally normal at this point. We may get a pullback this big, which takes us back down into this 4,300 area, back down to retest the point from where we broke out, basically. But we could see an outsized pullback that comes all the way back down into the roadmap line, which at this point kind of hanging out right around 4,100. We do have a missed monthly pivot at about 4,150, so that could be in the cards. I'm going to delete that line. So we could see a pullback to 4,300, and it could go all the way back down to this orange box, the horrible orange box that we could not get out of for forever. We might go retest it again, at least retest the top of it, which was around 4180, 4170, 4180. It might happen. If you're not prepared, you need to reevaluate what you're doing, because it's entirely possible that we see that now. We've kind of unclinched everything. The gamma's come off. The seasonality shows that historically, look right here on the S&P, historically, peak out and drop toward the end of June. And we've got 10 days left. That entirely is possible right there. Historically, that's what we see. If you're not prepared for such a thing, like I said, you need to evaluate what your positions are and be prepared to weather something like that. In VIX seasonality, we usually see a spike in late June. We haven't gotten one at all in June so far, so we're kind of due one, and this is a 20-year average of what happens here. So just be aware, these kind of things are hanging out there. So rolling on down to the futures, because the futures trade all the time. Yeah, just seeing a little. I talked about it this morning that we may hold that support line. At this point, we did hold the support line just above it. Zoom it up where we can see it here. Thought we'd hold that orange support zone. So far we held it, but we're still banging below that 15-minute roadmap line, and that is not overly positive. That indicates that we may drop through it. So, as I said, as I keep warning, if you're not prepared for a larger pullback, you need to evaluate your positioning. And Nasdaq this morning had bounced off and come up here. We kind of got a little spike and a little bit of bout of volatility there, and then kind of parked right on top of the roadmap line. that could be positive, but right now it's just showing non-committal to doing anything. You know, we made we had a small range, we had a increased range right at the open, and then parked it right inside the range. That's indecision. That's not going higher. That's not going lower. It's indecision, and it can lead to lower prices. And Russell also kind of working on this downtrend and finding resistance at that 15-minute roadmap line, similar to S&P. This is all they're all kind of flying parallel and looking like we could see a bigger pullback. So oil coming in a little rough here. A little bit of volatility today, definitely saw that. And I'm moving lines I don't want to move. Stuck in that orange box, for gosh sakes. Thought we might break out this morning, but nope. We retraced it, holding just in the middle. Nothing. There's no sign we're breaking out. There's no sign we're breaking down. We're just consolidating inside the range we've set from back here May 4th up here to the top at June 5th. So we're just inside the range of the last month. Brent is European oil, nothing to talk about there. Gasoline just kind of sitting right on top of the roadmap line, churning sideways. At this point, just expect more sideways from gasoline. There's no strong conviction, higher or lower. We're sitting in the range from April 13th down to May 4th. Just been inside there for the last 2 months. All of May, all of June, so far just sitting sideways in a tightening range, which is concerning slightly. If I had to be concerned about something, it would be the fact that we are tightening up the range on gasoline, and that usually leads to a pop. That pop can go up or it can go down. Up, of course, is bad for us at the pump, good for us trading, and down, and good for us trading because we could trade it down. I guess good for us at the pump. In NG, natural gas, just still doing nothing. Finding resistance at the same place we found resistance in May, almost a month ago. Just doing nothing. 30% of the natural gas futures contracts are owned between UNG and Boyle right now, and that seems to be suppressing any kind of move in natural gas right now. GC looks like it wants to push down to the roadmap line. I mentioned that this morning during the morning monster, and it looks like it wants to do that final little reach. Silver reached back down, hit the roadmap line for the third time now. Once here. It was kind of a flash dip and rip, and couldn't break out, and came right back down again. That's as we look through many market roadmap patterns, that's kind of a common occurrence where we hold a higher low than this one back here, and then eventually, after bouncing off it a few times, we just start going. So entirely possible there. Copper finding resistance at the roadmap line, unable to break higher. This may lead to a bigger retrace. The bigger pattern going here looks corrective, and may need one more final flush to correct this thing. Now, this doesn't really jive with silver or gold at this point, but copper is not really the same chart, not really the same pattern, and it is finding resistance under the roadmap line and does have the bigger corrective pattern that may lead to a lower low. Now, it can break out up above $4, would be positive on copper. FCX and things like that would be placed ways to play. All right, moving on down. I guess we should hit up Bitcoin and Ethereum really quickly. Oh, that's the Bitcoin ratio, not Bitcoin. Bitcoin getting some strength on the Citadel deal. Citadel and a number of other banks and broker houses, clearing houses, are partnering up. This hit the Wall Street Journal just a short bit ago. Kind of partnering up to launch a new crypto exchange. Now, this is not an exchange where they hold the coin. This is an exchange where they provide the marketplace for crypto. It's an interesting, different thing, but it's adding another layer of legitimacy to the crypto space. And this thing getting a nice big fat rally. Just so happens that that's on the back of the 3-day weekend. So usually when we see 3 days consistently rising on Bitcoin and Ethereum, and we get a 3-day weekend that we see a pop. This is all kind of like coming together. 3-day weekends during bullish periods tend to lead to runs in crypto. Today, arguably the first day back off the end of the 3-day weekend, and that's whether it happens Friday, Saturday, Sunday, Monday, or Tuesday, somewhere in that 3-day weekend, we usually see the pop, and looks like we got a nice run starting on Thursday, continued Friday, continued Saturday, Sunday, Monday, and today. Now, if we can break out through these highs we had back here at the end of May, we could see a larger rally up into this 32,000, possibly higher. Let me draw that on here really quickly. Yeah, right there, 32.6 up to 34, potentially even completing the head and shoulders up here to 36-ish. So that's what we have cooking on Bitcoin and Ethereum. Looks similar, of course, not nearly the prices. Ethereum did bottom in June, whereas Bitcoin bottomed in November. So Bitcoin is a little further behind on the pattern than Ethereum, and Ethereum could use this deeper retrace here at this juncture, but we may just break on out and run up to 2,200, possibly 2,400 on the upside. So there's our, your first indication is getting above those highs from back here in May. Getting back above 1,900 can take us up to 22, possibly 24. All right. So that's what we got cooking here. And Mara had a... Mara is always open to positions. This stuff's going to run for a couple years. We're back into a bullish period. If you don't understand why, you should watch like my crypto special from Monday, because I spent almost an hour talking about it, so at least 45 minutes, I think. So, all right, request. Let's go ahead and let's hit Tesla, because that was a request. We're getting to the 1.0 extension here today, and I need to draw this in a little bit differently. And I need to get this thing. Why is it? Where's my setting button? That was totally not what I wanted to do. Awesome. God, love it when the buttons disappear. Yeah. So the non-logarithmic move up from here, retrace here. We were hitting 100% today. That can be a giant corrective pattern. That's a little bit of caution. I would like it to see it rally on up to 300 at this point, or get a sub move. This is one big fast move with no pullback in between. So at this point, I'm cautious. I did kind of expect Tesla to come back and retest the roadmap line. At this point, it hasn't. So it may just rally right on up to about this 300 area, come back, retest the trend line before it pushes on up to 350 or so. I was going to say 3050, but no, it's 350. So it may rally right up to that 350 area. And if we look at it on log scale, that it gets even crazier. So it can get mighty crazy on the log scale. Not sure which one it's going to obey. Right now, it's been obeying the log scale pretty well. So that resistance doesn't really come up till we get up to around that 330 area, and then 385 on the upside, and then almost 500. 500 was the target I was looking for a long time. We just got this bigger pullback in here before we got up to it. So had to sit through a giant pullback. So Twilio, next up, stuck on the roadmap line. Hasn't been able to move beyond the roadmap line so far. Just stuck right there. Not really showing me anything. We're below resistance and stuck. Doesn't nothing sparking my interest. It doesn't necessarily look bearish. It just stuck. I would expect more of this consolidation. Possibly come up and retest this line up here, and see how the weather is. Like we tested it back here in February and March and haven't been back up there. So that's kind of what's cooking on Twilio. MSFT, nice pop. We're getting into resistance and marginal higher high and a rejection that may lead to a bigger, deeper retrace to the roadmap line. We could definitely see upwards of 15% pullback there. This is kind of, I was warning about all the AI stuff, Microsoft, NVIDIA, 15, and that one, a 30% pullback just to get back to the roadmap line. Highly likely. I mean, I'm not trading it right now, but it's definitely in the cards of realm of possibility, and it's probably a greater than 50% chance that we see a big pullback. A lot of these things are extremely outdone. Apple fits that bill too. I mean, just way outperforming. Although its August high was right up here, it never lost huge value, so it's really kind of holding the highs really well. This big retrace didn't go as deep as a lot of the big tech. We only saw about a 30% retrace in Apple, 32, where we saw much larger retraces out of other tech names. Like Amazon comes to mind. Like if we look at the retrace on Amazon, I mean, for gosh sakes, man, that sucker went down 56%. And something like Twilio, we were looking at a minute ago. I mean, that one, if we look at that, I mean, it lost a ton of value. 91%. And Roku comes to mind too. Roku lost, let's see, and almost 92%. So a lot of these high tech flyers with price, they had price to sales way over 20. This is like the big red flag for me on Nvidia, especially, particularly when things get over, when things like Roku or any stock really has a price to sales greater than 20, it becomes highly likely that we see a big, deep retrace. This happened way back when on Amazon. I'll have to go to a weekly chart and zoom way back in time. Way back here, in a land far, far away, in 1998, 99, Amazon was at a price to sales like 35, 36. Same kind of levels that we're seeing on Nvidia right now. And it did this. It lost 95% of its value, stock-wise. And you can say, well, Nvidia is a solid company, and Amazon was a solid company at the time. They were selling books, and but they were riding on the internet hype, and the internet hype popped, and they lost a lot of value. But that's just market cap, not really. I mean, they kept on trucking, and I mean, they've well exceeded anywhere they were years ago. I'm not saying Nvidia is going out of business. I'm just saying, for gosh sakes, man, be careful what you're chasing, because right now you're chasing like a 39 price to sales, and this thing can pull back like a vicious villain here. All right. Whew. ADBE. Yeah, it's breaking out. Potentially, if it can hold above this consolidation here, we can see we do have a resistance right there. Then above that, we go test the highs, it looks like. So that's the next resistance and the next resistance. And it hasn't had a nice, healthy pullback for over a month now, leaving a couple gaps along the way. So be careful. That's what I would say on Adobe CRM, Salesforce. Just found out my members area is going to move off of Salesforce, or my customer management, CRM system is moving off Salesforce to something else. Found that out right before I went live here, and we're just consolidating between the levels. So where did that level come from? Look right here. The bounce off the roadmap. Oh, excuse me. When we bounced off the roadmap, we came up to here. So that next leg potentially up to there, but not getting it yet. And we may see a retrace at any point here. May come on up, may retrace. We're hitting extension levels. Yeah, looks like it needs a retrace, or at least a sideways, until we meet back up with the roadmap line out here. So be careful. It doesn't, I mean, this one had a lot of trouble getting up. A lot of breaking through this high right in here. This zone built up a lot of junk here, and we're kind of coming up into that resistance now. See, that was a high from 2020. We went sideways from August right up to January 22. So like a year and a half, we went sideways in this topping zone, this big orange box. Now we're going to try to break back into it. CRM is one of those that got a 60% pullback. So, all right. I went over Amazon. Tomorrow. Yeah, it's finally breaking out. Like it's been parked on the roadmap line for days, and the first target's up here about 15. Next target up between 20 and 30. So it's been my target for weeks, months, I don't know, long freaking time. Expect it to at least break above 12, probably hit 15, maybe get to 20 to 30. So that's more for you. Too late to add positions. I mean, it's all relative. It's, 15's right up there and 20's way on up there. And long term, buy shares, buy leaps, sit on it. I have positions. I have options well out to 2025. Just kind of parked. Don't plan on doing anything with them for a long time, because the halving event's in 2024. That's like 18 months out. No, not 18 months. 9 months out. About 9 months out. And then we're likely to see 18 months past that of rally before we get to the next top, and then enter a new crypto winter into 2026. So the rally period from now till sometime late 2025 or mid 2025. That's likely the current path we're on. All right. MO. Whew, that's a gnarly chart. What are you thinking there? That looks like a piece of garbage. Sideways garbage. And we're at the lows, and if we start breaking below that, how low can she go? Is that right there? Looks like it may extend down to 38 on the downside. Maybe like, no way, but yes way, Jose. PM right here. I mean, Philip Morris, the, PM and MO. That one kind of in a flag thing going down, so, or going that way, down that way, opposite the screen. So, no bueno on MO or PM. ABBV. Looks gnarly. I wouldn't chase that. Wouldn't chase it with your money. Wouldn't chase it. Certainly wouldn't chase it with my money. Almost got to the. I think it touched the top of my target there, but that's not a reversal. Not yet. Not anything I would count on. That looks gnarly. That's like a gnarly consolidation that can lead to lower prices. I wouldn't count on it yet. There's people that might tell you it looks awesome, but that looks pretty scary to me. It didn't do like a big enough retrace that you could count on it. I mean, 26%. See, one of the reasons that concerns me and where this target came from, that's a 1, a 2, and this is the third move, and that's only like a 1, 2, 3, might consolidate for a little while and then push out and get the 4 down to like 118, possibly 107. So this was like the minimum I was expecting, really. And the way this looks, we may do this kind of situation right here and then get that. If that's not something you're prepared for, I wouldn't chase ABBV. So, XBI. There's plenty of stuff out here that looks pretty good. I mean, it's just not any of this stuff. So XBI, looking sideways. I've seen several articles that say biotech's ready to go, but that's a downtrend sitting on the roadmap line in a sideways, downtrending, nasty, gnarly thing. I mean, it's a downtrending channel. Made a low, made a higher low, made a lower low, made a higher low, make a lower low, make a higher low, or lower low, lower high, blah, blah, blah. It gets so confusing, I'm tongue-tying myself. So that is not a bullish breakout setup at all in my book. Other people are welcome to argue with me. You're welcome to fade me and trade it. It just looks pretty horrible. GIS, yeah, that one's holding up pretty well. See, we dipped below the roadmap line last time. Back here, spent. If this is what it's doing, gosh, it looks a lot the same. We could see it rally up and then get a little pop down, find support just a little lower. This move may be that big. Instead of using the fibs, it's sometimes easier just to draw. So somewhere in this zone right here, you might expect to find support if it does the exact same thing it did right back here. And then what we did, we popped and we went up almost to a fib line. So if we popped again, let's say we bounced off the top of that. Okay, get up to 93, possibly 97. You know, if we went from where we are, same 93, 97. But you got to get above this stuff up. You got to be back above the roadmap line. If you want the roadmap line, there's a link from back around Christmas or New Year's, a live stream I did, gave away the code. Or you can just click in the description, and for $5, I'll give it to you. And you get in Discord, so bonus both ways. All right, MRK. Can you look at MRK bullish? I mean, it is holding the roadmap line. That is a bullish sign. This was on the market roadmap watch list for the week, I do believe. Let's see. Take a quick diversion, run down the market roadmap watch list. And there it is right there. MRK was on the list. So this has a potential bullish setup. We need to break above 111 at the minimum, the very minimum. That would be the most aggressive position I would be willing to look at right here. A break above this on a daily chart. Then you've got this resistance from this high. Also, this is why there's a big orange box drawn on here, that high, and then also this high right up here. So you've got some stacked resistance above us. This zone right in here, that was the highs before we topped, and the high after we topped, kind of breaking up through that can lead us up to 123, possibly 127. Otherwise, I wouldn't get into it because it can still go lower. Now, you see last time we bounced off the roadmap line, we got a nice healthy extension. So we could get that again, but you got to wait for the entry. Like I said, the most aggressive entry above 112. And, you know, if you get into that entry, stop down here. Otherwise, it can bust and just keep on going down. Like, it hasn't retraced in a good long time. If you look at it, I mean, it tends to hold the roadmap line. It's done that for over a year now. I see no reason to not expect it to keep going higher. All right, XLB. The materials, just that's kind of a gnarly down channel. A little bit of a down channel wedge squishy thing. I don't know. Doesn't look overly bullish at the moment. Now, yeah, we haven't really broken out any higher highs yet. If we go off of this, we start breaking up through that, it's more bullish. We start breaking up through this prior high, more bullish. But right now, that's kind of gnarly. I mean, that's just that low and that low. You could say is a double bottom, but I don't know. That's a tough one. It got back down here today. Looks like it's gonna come back down. Probably get a little lower. Check one thing here. Yeah. It was a very divergent top, and it may go for a bigger retrace back down here. And Oracle. Yeah, Oracle's sitting at the, I mean, it needs a retrace. That was my biggest upside target, was right in this zone. It poked up through it, so a little overzealous on the upside, and retrace would be what I expect at this point. That was one heck of an exponential move. It can retrace all the way back down into this $92 to $98 area. Back down in here. It could hold higher. I mean, it's possible. Could hold on up here. Somewhere in that, back to 100, 90 to 100 area somewhere. Potentially. That's what I see. All right. QURE. It's not one that I think I've ever looked at. Maybe. Nope. No lines are drawn. Doesn't sound like anything I've looked at before. That is a wild chart. It's had some volatility. Sitting in the 618 retrace. Potentially this was like a five-way move up. If you don't know what I'm talking about, that's fine. Elliott wave style. You click on the button over here, like number, what's that? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5. Yeah, 6 button down. Over here you have Elliott wave impulses. This kind of, sort of, maybe. I'd have to run it on my other computer to see. Those get really close to overlapping, but they don't actually overlap. And then that one sticks up higher. So on first blush, this looks slightly like it's working. And then 1 and 5. 5 was 1618 times 1. Proportions are a little weird. I did do a 618 retrace of the whole thing at this point. This could be a bigger 1, 2. It's not going yet, though. Gives me a little concern. If we start pushing on down, we're probably likely to come on back down here. Use the right tool. This is kind of like the support zone right down in here. If we push, we can push to the bottom of that and still hold a bullish pattern. But I'm not getting the warm fuzzy right now on that holding. It's kind of messing with the roadmap line. Looks funny through there, is why I'm cautious. Usually it looks more like this on a reversal. We just bounce and pop up through, and then we keep on trucking, and then we come do a consolidation here and keep on trucking. That's not quite what we're getting right now. This is a little messier and a little gnarlier. While it is kind of holding proportions, it's under the roadmap line and not looking awesome. So primary expectation would be more of that at this point. All right. That's QURE. OXY. We got 540. All right. Yeah, that one could have the ABC complete. That's another Elliott wave correction pattern. Could be the initial move up and a retrace, but it's not looking overly bullish at the moment. And we may push down to 52. Yeah. Usually draw targets as ovals. Let's draw a target. You may need one more flush. Flush this junk out. If it got overexcited, it may come all the way down to 47. Lots of people have been hyped up on this one, I guess, because Warren Buffett bought a bunch of it. But ever since he bought it back here, it's been in a correction and not looking awesome. I mean, it had upside potential, but it just never did anything. And it never broke levels, never started running, and really looks kind of gnarly at this point. So please be careful. Downside is what that one really looks like. You know, I drew back here in probably in January that looked sideways, and it still looks kind of sideways to down. So that's OXY. Nothing great at the moment. I already did Bitcoin, BITO. If you missed it, you can just rewind the little slider. You can just click on the bar. You can go back and watch. That's a market roadmap bounce. I mean, that went just a touch deeper than I was thinking. The conservative entry is not until we get above 16 anyway, 1680, 1675, almost 17. And then the targets are up here at 20 and 21, where I've held the target for a long time. So everything's still looking good here. You know, 22 and even 26 are all targets. So looking like we're going to probably see 20. Maybe not today, maybe not tomorrow, but could go quick. It might go quicker than you think it might go, because, I mean, look at this. We went from right here, right up to there. That was like, what, the 9th to the 21st? Take you right up in that target. Look, right there. Boom. That could be before the end of June even. So next 10 days we could be up there. Wouldn't be surprised. VIX is consolidating just above the support box. That little worrisome to me. We hit what was almost a record put call ratio. Let me pull this up. Right here, look at this. This is the put call ratio. Let me zoom this up even more. We made a low lower than anything we've had for the last 10 years on the put call ratio. That is telling me that nobody plans on the market dropping whatsoever. I mean, like, what a small fraction of us do have puts, but most people are just not playing puts at all. They're not pricing any kind of fear, any unknown event hitting the market. That's usually when VIX reacts the biggest. So I'm holding a bit of SVXY puts. I've kind of covered that to death in the last few weeks. I mean, there's the expectation. I mean, it's right there. Like, between a 15 and 20% drop is highly likely to occur. I think somewhere back here, 64 days is one of the longest ones. I think 80. I think we had 75 days in here maybe. we're banging it. Let's see what this is. Roll it back over here. We're sitting on 66 bars right now. We could add another 10 days to it. Could be 75, 76 bars. It's already, I mean, it's sitting right at resistance. You can see these things don't all play together, and it's just coincidence, but I think we could see a 15 to 20% pullback in SVXY. And 15% takes it back to about 69, and 20% takes it back down to around 64. It wouldn't surprise me. I have July puts at 74, I believe it is. It's July 21st, I guess, 2023. Puts at the 74 strike. And they're not, I mean, I'm down quite a bit. It's just kind of a CYA position at this point. It's not really a trade. It's just a CYA. Groupon, or whatever this is, Global Payments now. Or I guess GRPN is Groupon, and that looks horrible. And GPN looks equally horrible. Fooled me. Pull it up and it looks the same. I mean, look. Those two charts look very similar and very both horrible. Price action. Probably going lower. Nothing bullish there. Why would you want to buy this until it's making higher highs? I mean, sure, it made a higher low. That's it. I mean, it made a lower high, too. So, how much bearish? I mean, the extension to the downside, 86, maybe 77. It reminds me a lot of PayPal. And that one's bouncing, trying to test the not the roadmap line, but the trend line. Downtrend line of these highs back through here, and may break down and get an extension down to 53. The ultimate target I had was down here around 45. It found support at the 1272 at 61, rallied back up, could come back up to the roadmap line, and then rally or drop out again. All right, IWM probably gonna go down to the box there. Yeah, I took an entry, and that expired today, so I closed it out for like 20-30% gain. That one looks highly likely to retrace back down to the roadmap line or this 618 retrace. Then holds there, we could go higher. If it doesn't hold that support, we can go lower, and 161 would be the target on the downside. Already. Yeah, you got to put on GPN. That's, I mean, looking at that chart right there, just zoomed in that view, that's all I would expect it to do. More sideways. Not really going up or down. It's kind of it's in that watermelon seed squeeze situation. Depends on if you pull it like that or you go off the high. Then got a little more room to fill out here. If you go like that, you got a lot more room to fill out here. Maybe like, how long can something stay in one of those patterns? Well, look at this one right here. This one stayed in it for, came dropping off the high in April 2022, and that's a cool message. And lower high, higher low, lower high, still a higher low, lower high, higher low, lower high, higher low. Attempt to go somewhere and stalled out at the resistance. it may break down. I would be careful. And PARA. Hope you're playing a put because that looks pretty bad. It could turning and come up, but that looks... That's a dismal chart. And it looks like it's going to go right down to here. It's tough to make money on puts when it's this low a price. Like if this was like $157 and we're looking at going to $130, that'd be easier to make money. Not very easy to make money in this small a move. So that's yeah. All right. Diesler, there you go. No problem, Craig. All right, anybody got anything else? I mean, it's 5:50. And got some kind of alert that popped up on my bar on the bottom there. Let's see. What did we skip? Netflix? Nobody asked for Netflix. Usually you ask for Netflix. Let's see. Let's hit Netflix. Netflix. Yeah, working it, baby. On the path to 500. Meta. On the path to 320, 330. And eBay. Well, that just looks a little gnarly. It looks like it's going to come potentially fill out that head and shoulders. And then we'll see what happens. It's a shoulder, head, shoulder that can lead to a drop or it can lead to a failed breakdown and pop. So AI is stuck at the resistance zone that I had right up there. Likely to turn back down, come back down and visit again. That would not surprise me the least bit after coming up to that. And that's actually a bearish target of resistance. We have 47% retrace. Ouch. That one you could probably make some money on some puts. Like if puts are cheap at $30, probably out to August. You could maybe make some money if it retraced that all the way back down. Maybe 33, 35. I don't know. I wouldn't spend more than $1 on them. If they're more than $1, or certainly if they're like $3 or $4, not worth it. Not even worth playing because the fade will eat your profit. Ford, potentially, just right back up to resistance. Resistance. Did finally break out of the downtrend wedge triangle, whatever bullcrap squeeze thing, but it stopped at resistance. I would like to see it rally up to 20, then get a pullback back to retest this resistance, which would now be support, and then break on up. 3 to 5 years, I do expect this thing to be up here much higher, but right now, and I do have shares and I do have some long-term options, leaps out to 2025, which are probably not going to be long enough because this is going to take like 3 to 5 years. So we're talking 2026 into 2028 potentially. It's going to be a while. All right. Let's see what else. We did Amazon, Apple, Meta, Netflix. Anybody else? Anything? I think that was most of them. Most of the stuff we usually hit. Going once, going twice. All right. Well, have to wait till next week, I guess, or come chat with me in Discord. Links in the description. Remember, you should be a subscriber because every morning at about 9:10 in the morning, before the market even opens, I go through a list of potential movers for the day, stuff that's moving pre-market, what I think, what's popping, what may be dropping, what we kind of have looking here. Okay, I see one final request here, and that looks like a gnarly chart. What a bummer to end on. Had to have a bummer chart, Craig. What the heck? It looks like a gnarly chart. I don't see anything to do on that one. And I'll be back with you in the morning. Sledge, you nail You do a really good job interpreting some of my babble in the mornings and turning it into massive profits. So, Sledge is one to talk to, y'all. All right. We'll see you in the morning. Make sure you're subscribed. Make sure you hit the alert with the doodads. And we'll see you in the morning. Bye for now. Thanks for coming.